Bonds are back. That's what you're probably hearing in the headlines. We've got a couple considerations that we wanted to just throw out there today very quickly in regards to bonds and what you're hearing in the headlines. Some analysts have come out and said that stock valuations and bonds are at parity. What they're really saying is that the rate of return that they feel like you can get in your bonds this year is going to be very similar for what you can get in the stock market. They think that you can take less risk and get the same type of return owning a bond portfolio this year instead of a stock portfolio. Does that mean that all of your eggs should be in bonds this year? You need to talk to your financial professional about that. Everybody's situation is different, but that is a consideration this year as far as looking to add bonds to your portfolio, and a good question for you to ask somebody in the financial field. Second point, what are normal interest rates? Historically, interest rates, the 10-year treasury, which is what most lenders base their rates on, the 10-year treasury has been really around 3 to 5% historically. So we feel like we're in a normal interest rate environment historically. It just feels a little bit more different compared to where interest rates have been in the past 10 years. But just keep in mind that 3 to 5% on the 10-year treasury is normal. Are interest rates going up this year? They're going down this year? I guess nobody really knows, but it appears the market is pricing in some interest rate drops or cuts this year, Lastly, corporate downgrades. They are outpacing corporate upgrades. What that means is that bonds, issuers of bonds, corporations that issue bonds, their credit worthiness appears to be dropping. So it'll be very important to look at the credit worthiness of the bonds that you're buying, the corporate bonds that you're buying in your portfolio. So something to educate yourself on. A financial advisor can help with that. Obviously, there's plenty of good research out there as well. But those are the 3 points that we wanted to talk about with bonds for our outlook for 2024. And thanks so much.